Good evening, Suriyoli. Okay. Sorry, I have a small doubt. Can I share my screen also if you want? I mean, how come that is possible? Is there any option there? Okay, share your screen. Okay, I can find, yeah, I can see that one. Okay. Okay, I'll wait for some time because we'll see for some more. Right, okay. Okay. Okay, I'll share my screen first. Hello everyone, this is Rajesh Kumar, Equity Research Analyst. Uh, is this how it comes, Suriyoli? Sharing my, hello? No, it is coming. Yes, okay. I'll go for. I went for application window. Is it okay? I'll do for application window. Okay, I'll go for an entire window. I mean, I couldn't get share thing. But it comes a different one. No? Surely I'm getting a different one. It seems that yes. No, no, no. The first one, entire screen. No, what do I choose? Your entire screen or application window or Chrome tab? No, no. I want to screen entire screen. That is okay. Yeah, I'm there only. But when I click that one and put it on share, and I get a different image. That. You can see the screen multiple times coming. Na? Okay, you are getting my screen right now. Yes, yes. Okay, okay. I understood. Understood. Okay, okay. I'll start moving on. Hello, hello everyone. This is Rajesh Kumar. Uh, First of all, we'll get into a few simple things because I'll start for the beginners, who doesn't know what is stock market and how to start with, doesn't know what is the exact business of in stock market. What we shall do is those who and some people would have been experts in these things, but you don't interrupt in these things because I'll start from the beginning. So it works like this. I'll show you how the stock market works. And normally it's like introduction. What is stock market business? It's like flow chart. For example, if you are a businessman, what do you want to do? You have business, but you don't have money. So what you you want money? What do you do? Need money. So next, what is the step? You have to go to SEBI. SEBI is nothing but the regulatory body. Securities exchange. Okay, it's a regulatory body. Then what you have to do is you go and apply for get an application and get yes, and afterwards you have to go for IPO. For most of the people, I mean, will be knowing it's an IPO. What is an IPO? Okay, and you have to float your company in the IPO. That is the primary market. And then once you float an IPO, your company will be listed in the exchange. what happens? The company will be listed in the exchange, and the preference is yours. What all exchanges you want? Normally, NSE, National Stock Exchange, or else both also, Bombay Stock Exchange. This is how it runs. So if you are a businessman, you have a business module and everything is going successfully well, then the first step you need is, if you don't have money on your own, then you can go to the SEBI and you can get an application filled up and go and float an IPO, wherein public fund will be, and who are interested in your business module, they'll buy shares in the primary market, which is listed in the exchange. And afterwards, what happens is it goes to the brokers, and then you have to open an account to the broker. Open an account to the broker. And second one is we start trading or investment. This is called as secondary market. So this is where the huge people, lots and lots of people start trading or do investments. All this stuff will be happening over here. See, there are three types of ways to look at the prices. Once you start this company and it starts floating into the market, and if you are a trader or an investor, how to get into the market? You cannot get into the market in the primary level. You can also get into the primary level. You can buy the shares, and afterwards in the secondary market you can sell. Here, the prices vary. Here it's a fixed price. IPOs is fixed price, wherein market, the company, what is the fixed share that has to be sold out there. And here it's not fixed, it will be varying as per the market trends. So it depends on your psychology, what you have to do. You want to be an investor or a trader. What is investment and what is trading? The second point comes here. So investment is nothing but it is more than 3 years. It's more than 3 years. For example, your investments like FD is also an investment. You'll go for an investment for 1 year, 2 years, 3 years, and those type of things are all investment. There are bond markets and a different type of things we can go for investments in post office, and various things are there. And in the stock market, if you're going to invest for more than 3 years, if you're going to take any stocks for more than 3 years, it is called as investment. Normally, it is called as investment. And for trading, it's less than 3 years. This is how you have to analyze. So how to look into these things? What are these things? And investments, you have different parameters. See, there are in investment and trading, there are 3 types of looking into the prices. How to get into the company? I'll tell you how to get into the company, all this stuff. But what are the basic steps to get into investment and trading? There are 2. You can get into investment and trading. It is simple. Investment is nothing but going for a longer duration, which is like traveling from Chennai to Delhi. Probably it will take 24 hours. But whereas trading is nothing but it varies from within the city or within the next state, Chennai to Bangalore. It may vary. But traveling long, it is like investment. Simple. But the same thing. Both are in the same tracks. Both are railways, and both are the same. But here investment is both are stocks. Everything is the same. But we work like, and how to look into the prices. These are the way to look into the prices. Like, first one, fundamental analysis. And this will tell you what is fundamental analysis. You have to pick up a stock. There are a lot of stocks, almost 10,000 stocks. Which one to buy, and what to buy, how to buy, on all these things will be in your bucket list. The first one is what to buy. There are a lot of companies. So what to buy is fundamental analysis. To technical analysis. This will tell you when to buy and exit. The third one is risk management. This will teach you how much, or should you, is it affordable to buy how much to buy also. Or if you're not affordable, then it will explain you are not affordable to buy. Let's say how much quantity. These are things. These are the main three factors which you have to keep in mind. First one is technical fundamental analysis: what to buy, which company to buy, or which company to scrutinize. All this, which are the companies to filter, all this stuff. And technical analysis will give you when to buy, when to exit. And risk management will give you how many shares to buy, how many quantities to buy, and how much money you have. Based on that, it will give you a calculation how much you have to buy. These are the basic three things. And what is fundamental analysis? And how to find what are those things? See, there are, you can go get into one thing. See, one example, you have screener dotted. In that, okay, once you get in, you'll get a login thing. You have to register login, then get into that one. Only then you'll have more parameters coming into these things. So these are all parameters. Once you get into this company, you have to. These are the places where you can scrutinize the company's data. We'll take TCS, or we'll take something else. Right? Better we'll take Maruti. Probably was. Okay. And this is the thing. Maruti Limited is principal activities of a company functioning, purchasing, sales of this automobile industry. Okay. And then first you'll get all these parameters: market cap, current price. So right now the share value is this one, and book value is, which is this is the price which is there in the balance sheet. So this is the balance sheet value. These are all very important in the stock PE. This is price to earnings. And you have a lot of things, dividend. You may be hearing the company giving dividend every year and those things. And you have a lot of parameters, promoters holdings here, and how much they have pledged. All this stuff will be coming here. And next you can see the chart of the company. And for 1 year, you can change it here, 3 years, 5 years, and you have. I'll come to these charts later on. So that's an important subject because that is technical analysis. And you have technical analysis in fundamentals also, but mine is completely purely technical analysis into trading, not into fundamental analysis. Okay, then you have pros and cons of the company. Company is virtual debt free and all this stuff, and here cons have everything here. You have to consider all these stuff, and you have to learn a lot of things because this will all give you more intense things of whether we have to get into this market, this company or not, and the peers of this company, this stuff. Okay. And their quarterly sales. You have to look into sales, operating profit. Because after sales, if the expenses are too high, then there's nothing. No matter we can get into this company. Okay. And we have to look into other thing, operating profit margin. 8% is a margin. As far as this year and last year it was. Let's omit this year. We look into the thing of last year. So it is 9%, 10%. And we have profit after tax. This is what matters. So tax is 22% net profit. So this is what matters after tax. This is profit before tax and profit after tax. So net profit is this one. So we have to look into these things, whether this is increasing or not, and as well, and we have to look into profit margin, operating profit, whether this is increasing or not, and we have to look into these things. These are the fundamental parameters we have to look into whether the company is good or not. See, you can see the sales also increasing, profits somewhere the same line, and you can look into these things. This is earnings per share. That's also very important. And these are the profit losses of the company. This is a balance sheet, and you have to learn how to look into the balance sheets. Okay, and once you learn, because that takes a lot of time, how to learn all these things, how to look into balance sheets. Here we have done okay dividend. You can see the dividend also coming up. They're giving good dividend, 13, 20%, 19%, 30%. Very nice there. And with dividends itself, you can earn a lot of money, it seems. And you can see the compound growth. These are all extra parameters which we have to look into. So we have to have look into a lot of parameters, and then only we can come to a conclusion that this company is good or not. After these things, we have cash flow. So it should be at least for 3 years. It should be a positive cash flow. That is good if we get into positive cash flow. And these are the other parameters: ROCE, debtors days, and inventory. All these things are there. And it takes a lot of efforts to get into fundamental analysis and filter the good stocks which we are going to invest. And we have to look into these things also. So credential ratings. So if the credential ratings are good, then we can go. If they are not good, then we should not go. So these are the normal. These are the simplest things we can get into the fundamental analysis of a company. Okay, and probably we'll get into something else, right? Because right now IT is doing good because of the digital companies and lockdown and all. Let's see what happens to Infi. Let's see all this stuff. Copies 2013. Let's see see promoters holding is just 13.21. At least we should have 50%. It should be more than 50%. That will be good enough. But that see technically the market is very good for Infi. It is doing good. You can see this one. This is in March when the corona came, and it fell like anything. And after that, it's moving up like anything. So right now the market is, it is higher in 2021. It is seeing higher. The price is higher in 2020. Sorry, 2020. January, February. Okay, the market went up above than the corona, before corona. Yes. And next we'll see what are these companies. See, first thing we saw this one, market cap. So I will give you 2, 3 simple things how we can get into and how we can filter the fundamental stocks. 2, 3 very very small parameters. Once you see these things, you can just omit which are not good, and you can just start your own on your own. Yes. How many type? What are the type of companies we'll have? One is small cap. One is we'll call it a small cap. Cap is nothing but capitalization. So we'll say it as small capital, or small capitalization or small cap. Or small cap. Small cap is nothing but if a company is less than 1,000 crores. I will check whether this company is 1,000 crores. See, it's more than 1,000, so it is not a small cap. Next, we'll move to what is mid cap. Mid cap is nothing medium cap. We call it as mid cap. Mid cap is between 1,000 crore to lakh crore. What is next one? Large cap. Greater than 1 lakh crore. So we'll see what TCS is right now. More than 3 lakhs. Sorry. So it is more than 1 lakh, which is So it is a TCS is a large cap. Okay, that is what we have to do. Second one is, I mean, this is different. I mean, we'll go to the next topic of fundamentals. So this is how you have to segregate. People will be telling small cap companies are going down, mid cap companies are coming up, large cap are doing good, all this stuff. So you should know what company, which I mean, what type of sector you are looking into. Second one, we'll get into what is market capitalization. What is this capitalization? What is So it's nothing but total shares into prices. Total shares into prices. You can see this one. What is the market cap divided the price? You can come across the volume. Total number of shares. So it is calculated this way. Market capitalization is nothing but total shares into prices. And you have a lot of terminologies coming into this market. It is called as current market, current price or current market price, or uh, it is nothing but last traded price. So what all it is traded, that is the last traded price. So what you are seeing current price 922.5. This is the last traded price of yesterday. Because today is Saturday. Yesterday was the market time when market closed at 3:15, and there was a post market, and after that this was the closing price of TCS. Hope everyone knows what is the market time for the normal trading and investment. It's 9:15 to 3:30. And what is book value? It is nothing but the balance sheet value. Okay. And after that, we'll get into different things. Second scenario, what and how to filter these fundamentals. There is one more parameter of how we do. It is P by price. P is price. PV is book value. Price by book value. So if P want to elaborate, I don't think so. So if PV is greater than I, it is called as expensive stock. Okay. And we normally ignore it. Second one is if market is when PB is less than 2, what is the scenario? It is called as undervalue. Undervalue stock. Wherein we normally avoid because this may lead to zero also. We don't know what will happen, like Reliance Communications. So most of the people will think in a different way, like this may be a turnaround. This 2 will come to 5. If it is less than 2 also, it will come to 5. So this may be a turnaround company, but most of the time, as we are a safe investors or traders, we don't have to put in so much of risk. Let's avoid these type of companies. And if this is between 2 and 5, then the fair valued stock. So this is ready to buy. This is one small step which I'm giving it to you. Just 2 steps. One is and then how to look into the price to book value, and which type of companies these are, capitalization, all this stuff. And based on this, you can just evaluate the fundamental things. There are a lot of things in fundamental analysis, and that takes a lot of time because it will take days together to calculate the fair value, and to get into those things. And meanwhile, we'll stop with fundamental things right now because this is enough, I think so. And next, we'll get into um, technical analysis. Okay. Is it audible for you? Hello, Suriyali? Okay. Okay. Right. Now you can see. Now you can see my PDF file, na? Is it? Yes. What? Okay. And there are a lot of things like, see, to be a investor and a trader, two different mindsets are there. First of all, you have to identify whether you are a trader or a or a investor. For that one, see, you have to go for a test. This is called as, you can go to this site www.trader.com. You can just save it if you want. There, if you go there, and then you can find a test, and it will, based on your psychology, it will tell you what type of a trader you are. For example, okay, once an answer. Okay, that you can go ahead and check what type of trader you are, and it will give you full analysis of yours. See, we have different type of mindsets. These are all behavioral analysis. The fear of loss leads to inaction. If you're in a trading, then these will all come across. Okay, I'll start from the first thing itself. Okay, and this is the simplest one we can say. Trade what you see and not what you think. These are small formulas for a essential, characters of a successful trader. And you have to go against your natural instinct, and you should have a simple system. And most of the people are not patient. Like, for an example, this year there was a big hit because of the corona, all this stuff. The market fell almost 45-50% in most of the stocks, and people are not patient and to wait for the good trading opportunity and pull it to go. What happens is, most of the people were fearful and they just exited during those times. Unless and otherwise, if it is necessary, like if you have a stop loss or something like a technical stop loss, then you have to exit. Otherwise, going down for 40% and after that exiting is like jumped up. It's almost most of the people are only minus 10% or minus 15% or minus 7. And Reliance and all, you may be seeing it has grown more than what we were before the corona. For an example, I showed something else like not Maruti, TCS. It may jump like anything before the corona. So you have to wait. You should have patience and you have to wait. That is what this is for. Good for patience is good for investments. Okay, and if you're a trader, you don't have to be. You can exit and you can enter anywhere. And that is what it gives you. Because for a trader, it is like you have to follow technical analysis, and it has to be that. For trader, and it doesn't mean that it is less than 3 years, no. So you don't have to follow fundamental analysis. As I told you, there are three: one, fundamental, technical, and risk management. So if you're a trader, it doesn't. There is no much importance for a fundamental analysis. But if you're an investor, fundamental analysis is the first one that you have to look into. That is the major jump forward. Okay, second, these are things, and let go of margin trades. Margin trades are a different one. When you get into broker things, you will know. Do not trade for just excitement. So most of the people are doing for it's a gambling purpose. Like they think it's a casino point, but it is not so. If you have some study and some basic information on this, you can do it good. Because if it is a gambling point, because here this is where the most of the your retirement fund, pension funds, whatever it is, those things are. Even bank FDs are investing at least some part of their money in equities, stock market. They invest in both bond markets and stock markets. It depends on the companies which they are going to invest. And how come they are going to invest these things on stock market? And you will be getting your your retirement funds or whatever PF funds or whatever money which you are investing in insurances. Where do they get those profits from? They take these profits from equities. So if the stock markets are good enough, only they will invest, and they have their own studies to get into those things. That is what the research analysts do, and that is what the analysts will do. So it is not that this is just for entertainment or gambling purpose. That is a different platform. So completely, this is like if you go into good studies and think, I mean, know what I mean. Good, if you have good knowledge, you can easily have good money coming out. This is like getting another. I mean, why is this should be a passive or alternative income? Because you have a main job here. You don't have to be near the system always. You don't have to be near the system, and you can just check weekly once or monthly once. I have my portfolio which I've been checking only once in a month. That to 5 minutes, 5 minutes for a month. I just spend for my portfolio just 5 minutes per month. That is what. So you don't have to be near the system. You don't have to look at your mobile or check into stocks. What is the rate? Why market is falling? Why market? If you're an investor, if you're a trader, it's a different scenario. But it depends on the trading style. What trading style you are following, that you have to look into those different time frames. I'll come to those things later on. Okay, and daily homework necessary. Okay, that is how you have to keep yourself updated. And if you are a trader, even for investor is okay. So sometimes being wrong also can be profitable. That you know once you come to markets, and that takes a lot of time. Okay, and train continuously. So you have to get updated. Adaptability. Suppose market is going up, you should know that market is going up. Suppose market is falling down, you should adapt immediately. You can have to get change your things, your trades, your everything. You have to change, and you have to get out if the market is going down. You know how to get out. You should get out. What point you get out, you should get out. So you have to change your mindset. You should not just remain saying that it will go up, it will go up. So 100 rupees will come to 60 paces, 50 paces. Even then, most of the people will be sitting that my target is 150. It will come surely. It will not come. Sometimes it may not come. Like for an example, Reliance Communications. I mean, we can take one example. There are a lot of things like that. Even right now, you can see S Bank, which is doing very bad. But 2 years back, that was one of most of the people's portfolio. Even I had during demonetization time, I had idea as my portfolio in my portfolio. Right now, see, I was trading 100 more than 100 rupees, but once it hit my stop loss, I took off all my idea stocks. I came out of idea stocks. Right now, you can look into less than 10 rupees. So you don't have to wait. If I would have waited there, it will come more than 100, 150, What is the scenario right now? We'll be in trouble. We'll be in pain. So these are the small things which we have to learn. So you should not be. You should, adapt yourself for the market, which side, which direction it is going. If the market is going downside direction, you have to change immediately your trades. And what you have to do that one to prevent, or you have to go for edging, or you have to come out. Whatever the thing is, you have to do it. INTS, INTS signal, market up. You have to identify. Like if the market is coming down, you have to identify. If the market is going up, you have to identify. If the market is not going up or not, it is called a sideways. If the market is sideways, you have to identify that one also. So it is your knowledge which you have to train in the market. React decisively. Yes, because you are adapting. Once you adapt to the market, you know once the market is going down, you have to react decisively. You have to come out of the market or do hedging purpose. Hedge and whatever those things are, and feel good when win or loss. That is the problem with most of the people. You cry, and next day you will jump. Once you win, you will jump. If you lose, you will just cry. That is the problem. Demonstrate self-confidence, exercise independence, because this is one market where you can, even if you are in hospital, you can just with a small mobile phone or a tab, you can earn money. And why I chose this market? See, if you are in the hospital, also you can earn with your knowledge, because if you are regularly trained, you can earn the money. Two, second one is after retirement. Also, this doesn't have an retirement thing. After retirement, also in most of the civilized countries, retired persons are just, they'll just sit before the system and just trade. So after retirement, also you have some work where you can earn. Two, these things. Three is why I decided this one is this is an independent job. I mean, for any other jobs, you should depend on someone else. Here, you don't have to depend on anyone. It's up to you. You have your account, savings account. From there, you can open a trade demat account. So with the PAN number, it is linked. Your money will not go anywhere unless it is. If you are going to put money into demat account, it is through your savings account. If you are withdrawing your money from the demat account, it is to your account, not to someone else. So your money will not go from your hand from demat account to any other person. It is not easy to pilferage. So this is very safe trading. One. Number 2 point is the money which you're transferring, putting, you're trading or investing, you're doing business in the stock market. Nobody knows, and except when you're giving it to the IT officials, I mean income tax officials. Otherwise, nobody knows what you're doing. Nobody knows what is your profit and what is your loss, and these things and all, it is up to you only. So it is very independent trading, in independent market. And even during this corona, when everything was locked down, we were trading because it is completely online. You can trade online. Otherwise, you can, if the mark, I mean, if the brokers are open, you can do it by calling them and trade also, call and trade also. You can do that one. Right now, it has become like everyone has their apps, and you can trade with the mobile itself. It's very easy, and all their platforms are very easy, and you can do it on your own. So these three things which came up, so that I don't have to depend on someone. I don't have to go and borrow, or when I mean if I lose also, it's my money. I mean, don't borrow for this business. Okay, so it's up to you, and this is why I chose this business. Secondary, when I started this business, I was into a different business. So I started as a personal trader. So what happens is, when I'm getting when I was into one business, what I would do is I'll start buying stocks this week, and I will not see that one. Once it hits my trade, I'll put a stop loss also, and once next week I'll go, or daily evening by 6 o'clock I'll see what is the market, and afterwards, after 5 days, 10 days, 15 days, I'll close the trade. So I don't. I mean, it's a secondary income for me. What happens is, if your money, if your passive income, you have a job or you have a business going on, but if you're doing this, if you're investing in stock market, if you're trading or investment in the stock market, it gives you more than the money what you are getting in the active income, which is job, or then you can, I mean, you can think of losing, I mean, closing the job or closing the business and get into full-time trader or a investor. Until then, you have to look into this business as a passive income. This is the thing. And one more, I'll get into why, I mean, what is wealth. Okay, I'll start. uh, Suril, you can see my screen. Hello. Yeah, okay. See, yes. See, this is wealth management. It may be not perfect, but as per books, it may not be perfect. See, normally what we have is, what do we have in our wealth? Gold, real estate. Real estate, nothing but a house or something like that, land or something. And third one is FD or negotiable instruments, something like that. And we normally have only these three things: FDs, or investments in banks, or post offices, NSS, or something like that, whatever it is. So we normally do insurance. We normally do into, I mean, we have only these things. So we normally have, as an Indian, we'll have gold, that is very good, and we'll have houses also, places also, what we buy, and we buy. We may be having, if we are living into one house, that is different, and the other one will be renting also. If you have two houses, and that will give us some money, and this also will give us some money, because FD will give you every month or every quarter, whatever it is, will give you some money. See, for this, we can estimate, normally we can estimate 5% per annum, and this year it is extraordinary. Don't compare with this year. And this also increases not more than 5% per annum, or maybe 10% per annum. Okay. This also PA per annum, and insurance is almost 8% per annum. This is how it is. But what happens? We don't in India. Most of the people doesn't have the fourth one, which is the very important one. It is stock market, shares. So this page is this plays a major part of increasing our wealth. So if it is for 3 years, what happens? Gold will come to 15%. This will come to 30%, and this will give you 8%. So total, what is your complete with? You have as of now, if you're having only gold, real estate, and FD or something else like that, your total wealth is suppose 1 crore. This give you in 3 years. This will give you 15%, and the next one 30%, and 24%. So total divided by. So your increase of your wealth, if you have 1 crore of wealth in all these three combined together, and the average will be around 23, almost 20 to 23%. So you'll be having your wealth almost 1 crore 23 lakhs, or 1 crore 20 lakhs. That is how it will be. But whereas when you come to shares, what happens is if you're going to buy a good company, and probably if it is 10 companies, if you're buying 10 companies, only 6 companies are going good. That's it. 4 companies not going good. Even that 6 companies will override these 4 companies, and you'll be in profits. First point. Second point is if it is investment. I'm talking with investment. Okay. Second one is this will solidly give you 20% per annum on a minimum. So for six, if you're having, I mean, this should be your approximate wealth divide. I mean division percentage. This should be around 10% of your wealth, and real estate should be around uh, 40% of your wealth, and FD should be around 10% of your wealth. So what happens is 60. You can have this one also as 20 probably. This is very safe because, and this we can have at least 30 to 40 new wealth. What happens is there are 2 3 things. This is liquid. This is not a liquid one. Illiquid. This is liquid, and the major junk which you are losing your liquid side is real estate, because if you want to sell your property, it takes time, 3 months, 4 months, 5 months, 6 months, whatever it is. But this is, all these things are liquid. For an emergency purpose, if you want to sell something, you can sell gold, or you can pledge gold something. FD also you can pledge, you can sell something. So these are all liquid. Likewise, this one also is liquid. If you sell your stocks, within 2 days you'll get the money in your account. So it is very liquid. So most of the civilized countries, I mean, and US and Europe on, normally this is the pattern they have. But we in India, we don't have these things. Only nowadays people are rushing into mutual funds, and even the markets are not giving mutual funds to their setup. But instead, if you learn what is market, you don't have to go to mutual fund. You can just get into these markets. Why? Why I'm not suggesting mutual fund, but they are good. If you're, see, this is the thing. So suppose market is 100 rupees. Okay, and what happens is mutual fund persons, they'll be investing 500 crores minimum. Okay, now the market goes down to suppose 85 rupees. What happens is if you are an independent trader or investor, independent. If you're independent, what you can do is you can. But what happens to this mutual fund? They are not authorized, or to exit, or I mean they don't have buyers sell their, because it's huge. See, 500 crores of stocks they cannot immediately sell. But whereas we have only less money because we are independent trader, we can exit at any time if we want. This is one of the advantage we have as independent trader. And what happens is most of the mutual funds right now, or in because of this corona season, it's like they are negative. Most of them. I'm not telling all. Most of them, and most of them have come up right now because of the bounce back. And this is the thing. What happens is they cannot come out. Suppose if we are an independent trader, what happens? The market goes down to 70 and turns up, and we can buy them at 75. Okay, and once it comes to our old exit price 85, we will be in profit. You can calculate that one. We lost 15 paise here, 15 rupees, but once it turns to 85 or 100, whatever it is, sorry, 100, we'll be in profit. So that is how the technicals work. When to buy, where to buy. And what happens for the mutual fund, they know fundamentals, they don't know what is technicals. So what happens is they look into only fundamentals. They know the market will rise within 3 years, 2 years, so they don't exit. So it's like investment, they keep it for investment purpose. But if you are a trader and investor also, even see, I'm an investor. What I do is normally sometimes I will not get out of the market if it is good stock. But if it is not good stock, what I do is I get out of the market. See, for an example, Maruti, we bought during demonetization time. It was around 4,600. It went to 10 rupees less than 10,000. And when it was coming down, we exited almost 9,200, 9,300, double the money. And right now the market is 6,000. Okay, we don't have to wait. But see, the scenario is after 3 years, the market has come down where we have bought the same place near our bought price. It hit almost 4,500. So our bought price. So instead, if you are these things, investors and mutual funds will not get into action. But whereas people like us, independent traders, though we are investors, what I did is I exited from Maruti at 9,000 itself, 9,200 something else. So I made most of the money. And again, I bought somewhere around this Corona time, season, I bought around 5,000 rupees. So right now, 6,100 rupees. I know this is an investment stock, but I'm making most of the money from those investment stocks with little added advantage, knowledge which I have learned from the stock market, as well as from the elders who have taught me all this stuff. And this is how it comes. These are the few things. So regarding wealth management, you may be studying in your books or something else, but this is how we practically work out. So most of the civilized countries will have shares at least 30 to 40% in the in the wealth thing. So it is not advisable to have complete money in real estate, and it is not advisable to have more than 10%. FD also 20%, more than 20%, because they will not give you good returns. I have given you the calculation for three. Na? Get into the fourth one. If I'm adding shares into that list, the wealth management, how we can do it. I'm giving a small gist only. It is not elaborate. Small things. See how we can do. This is how we can do. So 10% into 5% into 3, 15% plus real estate 30% plus this is 24% plus we'll have 90%. So total divided by 4, it is 39, 40% in 3 years. So your wealth becomes double. Your income, extra income becomes double. Previously it was 20%. Right now it is 40% in 3 years. So because of shares, your wealth will become will grow faster. Simple. It will grow faster. Okay. One second. Okay, we'll get into these things. So there are a lot of different styles why how you should be trading in the market. See, I'll give you different definitions of different, thing. One is exchanges. We have NS exchange, BS exchange, MCX exchange. This is for the beginners. And we have full service brokers, discounted brokers. I always suggest you go for full service brokers. Though their brokerage cost is high, that is very safe for your money. I can go get into these markets. And you have other websites wherein you can look into NSE India. See, this is NS India. We have Money Control. We have iCharts, wherein you can look into charts. Investopedia, this is very good. You can a lot of things from these sites. Um, these are the terms, basic terms: Indian stocks, Indian derivatives. Derivatives, that is a different one. Then there's no much time to elaborate those things. In the stocks, we have another thing sector also, commodities. When you can trade gold, silver. It is not a physical one, all a virtual one, and you can trade gold, silver, natural gas, agro foods and agro things and all there. And we have what all most of the things. I can go get into those things and see. You have currencies also. We have 8 pairs: USD INR, GBP INR, Japanese INR, and Euro INR. And we have another 4 things also introduced right now: USD, Euro, and we have all these things. So right now, actually, apart from these 8 pairs Indian currency, which are traded in the exchanges, other things are all illegal. So just stop looking into forex market. If people are approaching you to trade into forex market, please, because that's an illegal market. Maybe your money will be, it's a trap to get your money into their pockets. And these are the things: basic terms, fundamental, technical, risk management, stop loss. Stop loss is nothing but what I told you. It pertains to the technical one. Suppose if I'm buying a stock for 100 rupees, what is stop? I'll just define you what is stop loss. This is the first important rule in trading on stock market. This is the important and final rule. Okay. What is stop loss? Suppose you are buying a stock for 100 rupees, and you expect a market to go to 150 rupees. But what happens, because market is linear? It is non-linear. It may turn any side. What happens is market may fall also. So if the market falls, what happens? Like these days, Corona days or something else, market. The balance sheet is not good. Some management is not good. Something happens. Some corruption happens. The market may fall. So that time, what happens is you have to get out of the market. If the market, you have a stop loss, stop your loss. So market comes to 90 rupees, you have to get out of the market. Again, you can enter because you have saved your money 90 rupees. You can enter the other time also. So what happens is you have to have a stop loss, and without your stop loss, you should not get into this market. This is the first rule. This is what most of the people will not be knowing. You should have a stop loss. For an example, I'll tell you a practical example. Suppose you are a financier. You're going to, you are lending the money to one person. Okay. Next, you're going to collect the money from the person. He calls you and he asks you to come and collect the money. If you're going to that place, what happens? If you're going to that place, you are agreeing to the loss. Suppose he is not giving you the money on any circumstance. What happens? Your loss of 50 rupees is gone for the transportation. So you're agreeing to that money and you're just traveling to that place. If you get that money, it is okay. If you're not going to get that money, then you're coming back, then your transportation cost is your loss. So you're agreeing to that money and you're getting into that business. So same wise, if you're getting into stock market business also, this is the thing. You should have, once you are entering into market or somebody buying some stocks, you should know that you should exit at some point. What is the point? Before entering into the market itself, you have to plan that exit. That is called a stop loss. So at that point you should be using that one. Trailing stop loss and pyramiding. There are a lot of things that you can learn later on. And in the market, you have 2 3 things: Nifty, which is combined of 50 companies; Sensex, which is combined of 30 companies, that you can learn from anywhere in Google and you can search. Okay, basic terms. Market price, I have already told you. Ask bid is nothing but seller price and buyer price. And spread is nothing but the price between the ask and bid. Suppose one guy wants to sell at 100 rupees, the other guy wants to buy at 99 rupees. The difference is 1 rupee. That is called a spread. And future, those are all derivatives. You can learn it later on. Commodity also. Currency pair, I have already told you. So this is success for traders. Create your own systems, reprogram your subconscious, Be independent, successful, stop chasing the holy grail. Most of the people will be telling we have algo, all this stuff, but most of them are not actually perfect, and you lose a lot of money. Because I have seen a lot of students coming to me and asking me, sir, we have went to these algo traders and lost a lot of money, and these things happen. So stop chasing the whole holy grail. You learn your own methodology, what you can do, learn your own systems, that will help you, and start being responsible for your own success and your own failure, because it is yours. You are not giving money to someone else and he is losing, and you are a cheater or something else. Instead, you are the money which you are putting here, the success and failures, everything counts on you. So you can, it is your money, and you can take the responsibility. Skill is the key to success in the stock market. This is skill. This is what we are teaching, what we are instructing, and what we are telling is the skill. And for that, we have different. I'll show you. See, most of the people doesn't know what to do. Stock market. See, if you don't, many people know this is Mahabalipuram. Just forget about the store. Mahabalipuram thing. This is a store. People are sitting here, and these guys are novice traders. They don't know when the market. When this stone will fall. They don't have education. See, this guy is having this. He's a professional trader. What is having is he's hanging a, one safety rope over there. What happens is he's a professional trader. This is two different differences between what these things are. No education, solid education, no stops, always uses stop losses. Stop losses, the stops. Okay, stop loss. As I told you, 100 rupees, 90 rupees, that thing. Discipline, excellent discipline. So discipline is nothing but you should follow the stop loss. You should follow the stop loss. These guys will not follow the stop loss. They just wait. The market will turn. It will go to 150 like that. It will go up because my conviction, it will go up. That is how they'll. If without plan. So if you're trading without plan, this is the detailed plan. Detailed plan gives you monthly. I have to earn at least 5%, 10%. I have to, out of 10 trades, I have to win 6 trades, 5 trades. That is how you have to detail your plan. That plan will make you improve your growth. No system, this will be a proven system, because to enter exit you should have a system, and to have a stop loss you should have a system. So those things will work. Trade with emotion, without emotion. You should not trade without. You should trade without emotions. If it is loss, okay, loss, because you are already into that system. No? I know where my loss will be. The transportation cost which I'm going to get from the collection. So that is my loss. Similar way, this is your loss. Hello. Okay, next, trade volatile stocks. Really, can you see the screen? Okay. Trade volatile stocks. These are the volatile stocks. So this is volatile means very fast moving. So we should not trade very fast moving stocks. This is non-volatile stock. This is what professionals do. Slow and steady stocks. People think this is a gambling point. Novice traders, beginners, they think this is the gambling point. This is not a gambling point. It is systematic execution. So if you know how to read the technicals, fundamentals, then it is success. So these are the major things. 3 parts of a trade: entry, exit, stop loss. Okay, bullish is nothing but going up, bearish is nothing but going down. And if the market, see, this is what I want to tell you. Trading styles. Intraday, it is within 1 day. If you're going to buy today and sell it today, it is intraday. Swing is within 10 days. Positional is 100 days. Investment is more than 3 years. That is what I told you. And my formula is stop loss compulsory in all trading styles. Even investments, I told you, we invested in Maruti. In 2016 we invested, but in 2018 we came out of Maruti within 2 years. But we went for investing, but the market was not giving for. Was not looking into investing. So because it is hit our stop loss, we came out. We made money. Likewise, what should for intraday? What should you do? Holding period up to 1 day is intra. Okay, holding period for 1 day is intra. That for that you have to look into 5 minute chart, 5 minute chart, 10 minute chart, 15 minute chart. Chart is different one that takes a huge lot of time, and that's a big one. See, my training course material takes one day, and even that one day is not sufficient for me because I have compressed 2 days course into one day, and it takes a lot of time. So this is the main part which we'll be teaching in the classes: charts, candles, trends, technical indicators. With these things, we can do that. And swing is nothing but it is more than one day. So we have to look into 1 day chart. Sorry, 5 minutes, 10 minutes, 15 minutes. Uh, sorry, swing is more than 10 days. Sorry, up to 10 days. We have to look into 30 minute chart, 60-minute chart, a daily chart also. And for that also you have to look into technicals, trends, zones, patterns. For positional, same thing. You have it is up to it is around 100 days or something. Daily chart, weekly chart, you can look at. Most all daily is enough. Weekly is not necessary. Technicals is necessary. Trend and zones are necessary. Markets, sectorial analysis. Sectorial analysis is nothing but which sector you are going to trade. For an example, right now IT is very good because of the digital dependency on in the market and because of during Corona. So IT is doing very good. And the second one is USD INR is also good. So this gives a bonus for the IT sectors. What happens is, first of all, the market right now is going up. Second, which sector is to go, which sector are all going up, you have to check that one. That is called a sectoral analysis. So right now IT is going up. In IT, which companies are going up? That is how. See, once the wind is in direction, that direction you have to. That will give you more profits. Suppose wind is in one direction and you are moving the opposite direction, your profits will be less. Though you are getting, the profits will be less. So you should move in direction. So this is how we do market one direction, the same direction, sectoral analysis, which sectors go in that direction, and in that sector, which companies are moving in the same direction. There will go and invest or will go and trade. Okay, for this we need fundamental analysis. Okay, we cannot go and invest in S Bank or Outcome or something like that. And for long term also, more than technical, we need fundamental analysis, and then we need technical analysis to exit and enter. That is it. But here for long term or investment, it is called long term is called investment also. For here you can go for weekly charts and best trading styles that you have to allow. All styles are good. Okay, for intraday, one full time is for intraday, swing for part timers, positional for. But if you are you are a wealth creator, then go for investments. You don't have to worry about anything. Just put money and move off. For wealth creation, you can get into SIP mode also. You don't have to depend on mutual funds. If you have your own company, Maruti, TCS, like that, you have 4 5 companies. Every month you can have 5,000 rupees, split those money and put it into that company. You can buy your own stocks. For investments, I may recommend 2 3 things other than Bharat bonds are there, Nifty Bs, Gold Bs. These are all exchange traded funds which will be very safe for you. When you can invest in those things also. These are the fundamental and technical analysis which I normally used to say. Fundamental analysis I have explained to you in Skinner.in. Okay, I think these technical analysis, these are all a little bit intense: charting, candlesticks, patterns, and all these things. That will take a lot of time. I think we are moving more ahead of time. I was told 4 to 5, but right now time is more than 5. Okay, these are all candlestick types. I'll show you what are candlestick types. Okay, these are candles. These are normal candlesticks. So will we have time, or we have to close it down? Okay, okay. Then I'll show you a few other types. See how we normally do. I'll start screen sharing rather than these things. See, I'll give you one. You can see one example of our group. See, I have a group in Telegram, Rajesh Kumar channel. Another one is Talks. This is channel wherein only I can speak. This is a group wherein people ask for queries. You can see people asking me queries, BPCL view, and I was giving them all this stuff. These are technical stuff. So probably I'll give you 2 3 examples which we hit in the market. Why you should not believe news. See, if you are a technical analyst or someone, don't go for the news, don't go for TVs, don't go for most of the papers or something. Just keep knowledge, but don't look into the companies which they are buying and selling, because this all these things happen. I'll show you how few things which happen, which we caught. Yeah, June. Okay. Yeah, you can see this one. Can you see? Okay, this is SBA. You can see in the left top SBAN. This is SBA shares. Okay, the market was falling like anything. You can see this is March, F is February. You can see my mouse. Just follow my mouse. F is February, M is March. These are the candlesticks. Candlesticks nothing but this is daily candle. One candle is 1 day's movement. Okay, market was falling from this price. You can see in the y-axis. You can see. Uh, Sorry, I think this is x-axis. Okay, from market was falling from 331 to 288 and fell to these things. See, in May, March, after March, market was recovering, but SBA was not recovering. It was falling like anything. See, in March, I mean, in May, what is the day? You can see here, SBA 21 May 20, 2020. I gave a call like buy zone. This is the buy zone. Here we have to buy. This is called price action movement. This is a different subject. In technical, this is one of the most important subject. Okay, and in that, this is the buy zone I have mentioned. What is the buy zone? 157 to 148. If it goes below 148, then we'll close. There comes the stop loss. So we'll close if it goes below 148. Rather than that, what we have is 152. With 4 rupees we are buying. This is the place we buy at the least. Okay, next what happens? You can see we bought at 155. Probably you can see this one. I'll show you the chart. 153. What happened next few days? We bought at 27, 21st. Okay, 21st. Just look into those markets. 11%. When is the date? June 1st. Within 10 days, SBA 170 profit 11%. See, SBA done 189.90, 25% in 15 days. I'm telling about these days. So we caught the market at the lowest. So this is how the technical works. You will catch the market lowest and sell at the highest. And I'll show you one more thing also. This is how technical works. See, it was in 2017. I think so. Yes, I'll show you when. See, in 2017 you can see this one. This is the market when I gave. You can see TV today 03 September. This is in 2017. Okay, you can see the dates here, the chart 2017 September. Okay, I gave a call. Stop loss 235 and the market was 255. Target 284, 299, 293, 360. So what happened next? TV today hit 305. TV today more than 15% in 15 days. It hit second target. See, these are technicals how we follow, how to take a trade, when to exit also. So it gave this one. And next day it was 10% up. Okay. And see, on after, see, we gave a call at 3.9 and 26.9. You can see TV today all over the news and all retailers jump buying. Today, what happened? Lower circuit is means it is falling down. The market fell down. TV today market fell down 10%. What happened? We bought this thing and we almost sold everything. Almost 25-35% profits. We were into 25-35% profits in those days. And after that, well, the market fell like anything. Why is that? Because news comes later. Because what we do is we buy at the early, and afterwards what happens is few of the experts see it growing for a few days. After that, the experts will come to the TV and tell you can buy TV today now. What happens is once they come, they'll come and inform us once the market is at the peak. People like us, what we do is when the market when the people are greedy, we start selling. And the normal novice traders, they choose to buy only the market is up, and they choose to sell when the market is down. So it's a different process. When the market is heated or greedy, people are greedy, we sell. Okay, because that is where the novice traders will buy. When the market is oversold or people are feared, that is where we people buy. So it's two different things. So buy when the people are fear, sell when the people are greedy. This is one simple step. It is not a formula at all, but this is one simple psychological step. So don't look into news. This day when I was selling because I bought at this place at 3rd of September. I sold at 26th of September. But what these guys were telling to buy, TV, all TV news were telling buy TV today. But what happened that same day, the market fell 10% because we were all selling. So this is how it works. So technical analysis will give you lot intense and where to at the lowest price, cheapest price, and sell at high price. These are all the various things which will give you in technical analysis. But you should have a good trainer or good mentor or good coach, technical coach in your hands or in your portfolio. And this is how it works. I'll give you another example also. See, for example, we had how would we know that government is going to give us some stimulus or something? Even right now, I gave you that SBA. That time, the government gave you some stimulus, the market jumped. See, SBA. I'll give you another example in 2017 itself, and you'll understand why we are insisting on technical analysis. We'll go to 2017 itself. There was a stimulus in 2017, and the market jumped up like anything. We have all the records. This is see, Telegram is one good thing. It will be stored in unlike WhatsApp, it will be stored in iCloud. What happens is we can from the start of this thing we can take this data out. So that is 2017. Okay, this coming here. SBA. Same thing in 2017 we had this thing. Yes, you can see the chart. I'll show you the chart. Okay, and this is the chart. See, same thing. This is in 2017, 23rd October 2017. There was a buy zone here, and we were actively doing previously with the buy zone. And this time, what happened? This buy zone broke. So I stop loss here. It hit this place. You can follow my mouse. And afterwards, what happened is we have another buy zone. It came here. See, that day the market was red. Red means selling. That the day which 23rd October, when I put this chart, the market was selling in red mode, 243.65. Okay, so I gave a buy zone. What is the stop loss? 241.13. So 241. Probably will have 3 rupees stop loss. Okay, what happened if you have bought for 3 rupees stop loss? You can see SBA target I have given 254, 261, and it went like anything from 23rd to 26th. You can see that what happened is that day itself. I showed you the third candle. No? It was in red. It grew green, and what happened? 2, 3, 4. In 4 days, that was the time when the government was infusing 96,000 as 96,000 crores in for country's economy. But we didn't have any news at all. See, news came only after this day. 1, 2, third day the news came, and the market went up almost 45%. We had almost major chunk of money coming into our pockets. See, every day the market was all around 10% up, 10% up. We had, see, target stop loss, sorry, target, what is that? If we have bought on 245, it went around 345, 100 rupees stop loss, which is nothing but 45%. So we had a profit of 45%. This nobody gives you this because no insider, only RBI and internal internal affairs ministry will be knowing this information. Nobody will have this information, and we are not big giants to get information from those people that this is going to be like this. But what happened is because of technicals we caught this, so we are better than the others. If you have technicals, if you're mastering technicals, we are better than the others. So we just in 4 days we got a profit of 40%. So this is how it runs. So if you learn technicals, all these things work. Point number one, if you learn technicals and fundamentals, don't look into news. Don't hear to most of the other persons who come into media and give you all this stuff. Just be away. But if you can follow them for their trends, that is it. But don't follow any of the stocks with detail. You take your own study. You have to get into your studies only. I mean, without your own study, it will not work. You have to put your own information into that one. Okay, and I'll get into. Okay, these are the candles patterns, and these are all elaborate ones. You have different patterns that you can learn from someone, good experts, and these are things. These are all the technical things. These are called pivots. These are right now during these volatile times. Pivots are working excellently. Most of the people are trading with pivots only right now. For this season, see, all things will not work. All techniques will not work for all seasons. It varies. For example, I'll give you a different one. How to understand these technicals. In maths exams, you'll have 100 formulas. 100 formulas you'll be having a notebook writing all 100 formulas. If in the question paper, exam question paper, you'll get a question paper and you will see all 100. I mean, all questions. All 100 one formula will not suit all questions. For each question, you will have to get one formula. Likewise, here also the formula differs. For season or for volatility, everything the formula differs. So you have to suit the formula in which season, on which trading, on which style. So that you have to get that knowledge. That will come out of experience, and you have to train with good mentor or good coach or something like that. There are a lot moving averages. We have a lot of technicals into volumes, technical indicators, RSI, stochastics, see ADX, ATR, MACD, and how to use these things. What is the shortcuts to get into those things? These are a lot of things are there with theoretical things. What normally I do is I give them a crash course like thing. For an example, if you're taking a NEET exam, people will go to a crash course for 1 week or 1 month before the exams. They'll inform you how to get the exams, though they have studied for 2 years, but that too, so we normally do. We don't get into the historical things of these things. Who invented, what they did, what are the papers. We don't. Only do. Okay, and probably I'll do this one. See. This is the risk management part. So I'll tell you normally, no single indicator is the right one. I told you right now, it will not work for all seasons. Right now, one indicator will not work for anything. One single formula is not good for all questions. So no single indicator all the time. No, too many signals give you conflict. So you have to follow simple strategy, one or two. That is it. Best to focus 2 out of 3, and choose one for trending market and one for sideways market. The market trending is 3 different types of trend: uptrend, downtrend, and sideways. Okay, 3 different trends. Stock filtering, that you have to learn. Risk management, okay, that you have to learn. See, this is 3 reasons why traders destroy their account. No stop loss. Without stop loss, that is what I showed you during novice traders. Difference between professional traders. Trading a volatile stock, it is there. Trading with margin. What margin? I'll just give you a simple example, a simple thing. See, if you're going to trade, for an example, right now the market, your one share is 100 rupees. Okay, you want to trade 100 shares, then you need 10,000 rupees. What the broker will say is, sir, I'll give you 10%. You can trade with 10%, which means you can trade 10,000 rupees of stocks, 100 stocks of that 100 rupees stock. You can trade for 1,000 rupees. So what you will do, you will go and buy. So what happens is, they are giving you a margin so that you can trade 100 stocks at a discount of 90%. You can trade with 10% money. So this is the margin they'll give you. They'll be giving 10%, 10 times, 15 times like this. What happens is, suppose there is a move of 1 rupee. So 1 into 100, 100 rupees gone. If it is in the wrong direction, if it is in the positive direction, it is okay. If it is in the wrong direction, what happens? If market goes from 100 to 90, your complete money is gone. Whatever you have invested 1,000 rupees, that 1,000 rupees in the margin and 1,000 rupees will be off. So there will be no money. So the safest thing is don't trade with margin. To be in, if you are in, novice trader or a beginner, don't trade with margin. Trade only with cash. Whatever you have, you trade only with cash. If you are want to be a trader, trade with cash. Risk management. This controls big loss. What I told is stop loss. If you have a stop loss, automatically there will not be a big loss, because you'll be putting a stop loss which will be a shorter one, small loss. That is called a small loss. So you will control your big loss. So what happens? Once you use this risk management, what happens? Minimize your loss, maximize your profit. How to maximize your profit? That it is a big elaborate class. It will take at least half an hour to 1 hour, and that you have to learn a lot of technicals. Only then you will know what is. It is this is to maximize profit. I'll tell you one simple thing: ladder. If you go with the ladder, price goes like up, you have to go. Your stop loss also should follow like ladder. So that is one simple technique I can tell you. Optimum utilization of capital. Here you can use complete capital. Not necessarily. If you go with risk management, you can use different types of cap. Different sector. Partial capital for partial for different stocks. It is not that you should always use 50,000 for one stock. If you have 2 lakhs, 50,000 4 stocks, it is not such a way. It works in a different way. Some stocks will take 75,000 rupees. Some stocks will take only 20,000 rupees. There is some calculation which is called as position sizing. Based on that, the capital will change. So these are the risk management things. As I told you, there are these are trading styles, parametering and paratrading, and you have to plan your trades, all these stuff. And what is RR? I'll just explain you what is RR. This is one important thing. Okay. Okay. RR is nothing but risk to reward ratio. Suppose your stock is this one. This is current price, and 90 is your stop loss, and your target is 150. So what is the risk? 100 minus 90 equal to 10 rupees. What is the reward you are expecting? 150 minus 100 equal to 50. So risk versus reward. So 10 is to 50. 1 is to 5. So this is the risk reward ratio. If the market if go only if R is more than 1 is to 2 or 1 is to 3, depending on the trading state. I told you intra, whatever it is. So this is one important thing, risk reward ratio. Unless and otherwise you have risk reward ratio, you should not trade. For example, if you have 1:1, what happens is your brokerage tax, everything eats up. So though you win 1:1, you will be losing the market. You will be losing you will be losing money. So better to trade 1:1. This is for intra. 1:3 above is for positional or whatever it is for long term. 1:3 is the normal one. Okay. Again, we'll go further. Hope you understood the risk reward ratio. Okay. Next, money management. How to manage the money. This is one subject which is inside risk reward. Risk management. That is called position sizing. Position sizing is what I told you, and afterwards we'll get into the these things. Behavior, trading psychology, behavior analysis that you can read, and that's the theory part. Fear of loss aversion. Fear of loss leads to inaction. People will not come out. See, you have to adapt immediately and you have to take some action. That will not be. Most of the things, inaction will be there. Confirmation bias. Just say that intuition decision. You have a decision and you'll be confirmed and be sitting there. Owned by an ownership, because that stock you have found out that this will go up and you'll be sitting in that one stock unless and if it goes down also you'll say that that stock is mine. Or you may be working in a company, for an example Reliance Communications, and because of that what we'll have is you'll be sitting there itself because that company will go up because that's my company. But stock will not go up, it will be going down. It's a failure stock. And predicting absolutely random event on the basis of what happened in the past. Sometimes what happens is previously there was a big up, so same thing this time also it will come. So people will be waiting with that such type of mindset. Herd mentality, common behavior in investing community. What happens is someone tells in the news or someone gives you some suggestion, people all will go behind that stock. So if you want to buy, they'll go buy. If you want to exit, they'll go and exit. So someone tells something, they'll go behind. Simple. Anchoring, sticking heavily on the first place of information. So someone gives you first information, you'll stick to that information. You will not change. You don't adapt or you don't react fastly. Projection bias. We project recent past to the distance. What happens is future. You will not understand what's going to come in the future. So after 1 year, there may be a court case in this company or management change this company, which will be bad. But you will not see that future, and you will ignore that future, and you see only the recent past. Last week, last month, the market was good, so I'll just jump into this company. That is how you'll go into the company and put your thoughts, and you'll be stuck. These are the things, and future options. These are derivatives. Margin will come into those things. Commodities also are derivatives. There is no equity market in commodities in India right now. And what you can do is, I already told you, thartest.com. You can go and what type of trader or what type of psychology you have in trading, that you can go and test. The first time you go with the test, that is the true one. The second time, that will be manipulated by your mind. So the first time you go to the test, that is the true one. And what happens is, once you learn all these things, everything, the complete package of investing, trading, and whatever the thing is, styles, all these things can be passed on to your new generation. That is it, your kids or whatever it is. So this one beautiful platform, you would have seen lot of persons buying MRF shares, Maruti shares, keeping it with them and giving to their grandparents, children, making hell a lot of money. So these are things which they pass on to them. Not only the shares, they'll give the information how to do this. For an example, you can check with Ambani also, Mukesh Ambani or whatever it is. His father did something. That strategy has been delivered to his sons. But one went wrong. You just forget about that one. The other one, who was waiting all these days, just waiting from 2010 to 2017, Reliance was not doing anything. Technically, it was out of nothing. It was there sideways. So those who put money in 2010, 2017, if they have invested 1,000 rupees, 2017 also the money was 1,000 rupees. The share was not going up at all. So this is the style. So if you know, but he waited patiently. After 2017, right now till 2020, the market went 4 times. He jumped like anything. But they have their own style of trading. So you should pass on to the same. Probably you'll be having the same style in your own business also. This is also a business. This is business. This is not nothing else. This is not gambling point or something else. This is also a business wherein you can carry forward this business to your younger children, to your younger generation. What happens is the plus and minuses, everything you'll be knowing and can pass on to them. For an example, I can give you one more. Why this strategy? Why I'm telling about passing on to generation. See, if you are a pawnbroker, okay, if you are a pawnbroker, what happens is they have a strategy, 2 rupees interest per month. So for generations, 200 years, 300 years, they are doing the same financial business. Maybe one generation would have gone away for 3% or 4%. One generation would have gone 1.5%, 1% also. What would have happened right now? They would have hit in the 3%, 4%, and came back to 2%. And again, someone would have gone to 1.5% and couldn't manage, came to 2%. They have fixed a thing like for 2%. So this is the way you can get into those things. That's a strategy. Same like you can pass on this strategy to your generation, next generation, and you can handle things similarly. This is a business which can be done with your job also, with your business also. So you can have an alternative business which can be going through your life long, and you can pass on to generations. You don't have to be there as a full-time trader into the market. So if you are a different, I mean, if you are working, if you are having a different job or something, you can do a position. You can be a positional trader where can you have stocks buying for 100 days, 200 days, 300 days, or 15 days, 1 month. Probably you can do it for monthly also. You can get monthly income also. This will give you passive income. As I said, in the wealth management, you'll be getting 20 to 30 to 40% or 20%, 30% also into that. Okay, so do you have something else coming up? Yeah, any questions? Any questions you have, persons? I mean, with that link. Yeah, please. Any questions? Yes, yes, you can share because this is a question. I try to finish as fast as I can when I was given 1 hour. Like I couldn't do it. It's almost 1 hour 40 minutes. You have any questions? Please, you can just put in the chat. Feedback link, please. What type of feedback link you need? Okay. Suriyoli, they were asking for feedback link. Feedback link. Okay, right. Okay. Okay, that will be shared. Feedback link will be shared. Uh, nice session. Okay, probably is this a nice session? This is very. It's a KG kindergarten level in stock market. Okay, people who want to get into market, they have to learn a lot, and don't get into gambling type of people. There are a lot of things. It has to be done step by step. Uh, please look into those things. Search, go for Google, get good mentors, good trainers, then you can get into this type of stock market things. And also don't get into cheap training materials or cheap training instructors. One, two is don't get into discount brokers. Maybe most of the people will be offended. I'm sorry, but always get into, that is my experience, which I'm just passing on to you. Always get into full service brokers. That is why I'm having my own sub brokerage in Motilal also, which is doing very fine, and I have my own contracts with them. And it's in go and search. There are a lot of good. I think no questions. I think really, I think there are no questions. Shall we wind up? Yeah. Okay. I think okay. Okay, nice. Okay, because this is just very small. I mean, kindergarten level. I What happened is I mean 1 hour is not easy. I just rushed up. Anyway, thanks Suryali for giving me an opportunity in this one platform. Thank you very much. And if at all people need to contact me, they can contact me anytime through Suryali, or they can contact me through Telegram or Facebook, whatever it is. I am there all. Thanks anyways. Thanks Suryali. Thank you very much. Thank you. Thank you. Bye.